Hey guys, welcome to another video, and in this video we'll be discussing how to time that all-important high of the bull market, specifically with Bitcoin, how to work out when to get out, the potential dates and times of when the price could arrive to that all-important high, and most importantly, what we can do to get ourselves in a position to be ready for that event. Okay, so in this video, starting off on CoinMarketCap again. All right, my personal favorite area to look at or web page to look at coins. I think it has the vastest variety out of all of the different places you can go. Now, each place has its own benefits, but I believe CoinMarketCap has been really consistent throughout the years and has never failed to put out great results. Okay, so today the conversation is about Bitcoin. Now, why is the conversation about Bitcoin? Simply because, as I've spoken about many times before, Bitcoin, the entire market is heavily weighted on Bitcoin's price action and movement. Okay, if Bitcoin increases in value in terms of its price, then so does the other coins, okay, or all the other altcoins. Okay. Now, if we look at the ratio, looking today, the market cap is $1.867 trillion. So just beneath $2 trillion, okay, which is still relatively small. Now, if you look at what we have here, the market cap of Bitcoin is almost $1.1 trillion. So we're looking at roughly about, in terms of the ratio, will be 58.9%. Now, Bitcoin dominance is dropping, which is an important thing to discuss. Now that we're at the end of Q1 and we're moving into Q2, there's going to be a lot of increase in the shifting of money between different markets and etc. from different levels, whether it's going to be M3 money, M0 to M1, all of the different levels of money aggregates are going to be shifting hands very soon. And I believe a lot of that money is going to come into the crypto space. Okay. Now, we still don't have mass adoption. We're quite far away from that. We're still at 1% of usage in terms of how many people are involved in cryptocurrency. So you are part of the 1% if you are involved in crypto and listening to this video today. So speaking about Bitcoin, since Bitcoin, in other words, is the telltale sign for us to know what happens with the other coins or with the altcoins, I believe it's very fundamental to understand, first of all, how and what to do if Bitcoin was to, as we would say, moon or shoot to the moon. How do we behave? How do we know what the top of the moon is? How do we know what the bottom is? How do we know to stay in or not to stay in? Okay, so just without going into a, a long introduction, let me get straight to it. All right, so first thing that we want to look at, and it's very interesting to me, how Bitcoin is for many reasons. Okay, I believe Satoshi Nakamoto came up with one of the greatest ideas known to mankind, for humankind, for the betterment. All right, now Bitcoin itself, okay, now for those of you who may not have been around, now I've been around in crypto personally since about 2017. I would say 2018. If I'd be totally honest, I would say more 2018, because in 2017, I was just a speculator from the outside. I was just looking at coins. I think what struck my attention is when I saw Cardano go from 3 cents to $1.33, even though it didn't have any technology at that time. It was just a brilliant idea. Okay. And it really caught me by surprise. And also Bitcoin, jumping from about 3K to 18K at the time. Funny enough, I thought that was such a huge number. Now we're at 59,000. But at 18,000, I was so completely, gobsmacked. So I kind of bought in at near the top. I would say I bought in, at the second leg of the top, not the top. Okay. And I held on to it for a while, and it was bouncing around, I believe 10K at the time, between 9 and 10K. And I got tired of it. So I sold all of my Bitcoin and I withdrew the money to use it for leisure, which, if I had understood Bitcoin a bit better, it would have helped me to be able to rough it out or maybe rebuy at the lowest points like what we had in March 2020. But my mind wasn't geared towards that. So I have to be honest and say that, Sometimes there are some people that come into the crypto space that are what I call alt minded, or their minds are more tuned towards altcoins because that's what they've really heard, maybe a friend or some YouTube videos. And there's others who started from the Bitcoin rally or from the Bitcoin era, okay, into the altcoin era, which I think is more healthy because they have a broader understanding of the market, the space, the technology, why altcoins exist, and etc. I think this is one of the things that before I continue, I, I believe I have the responsibility and also by my integrity to make sure whatever I say on any platform is going to be conducive for learning and to bring truth and also to bring safety, you know, and then understanding and still be able to get some massive gains. So with Bitcoin, you know, coming into this space, Bitcoin is a digital asset. Okay. Now, the way it was theorized was as a digital currency. Now, to understand this, Bitcoin was born in 2008. The white paper was released officially by Satoshi Nakamoto in 2008. 2009, it was listed on exchange, and I believe it was, uh, I think 1,300 plus Bitcoin for $1 that you could get, which is absolutely crazy in my mind because literally for $1, you could have been a millionaire. So it was an absolutely fantastic opportunity, you know, during those periods of time. Now, Bitcoin, as it was theorized, is for peer-to-peer payments. It came around 2008, which isn't an accident because during that period we had the last cycle of financial crash. You know, the last cycle of financial crashes. You know, the nature of the 2008 crash. Okay, and who got bailed out. Okay, I've discussed it many times over. If you want to hear more details on that, head over to the Wealthy channel, the Wealthy Show. Okay, if you go on YouTube, you can type in the Wealthy Show. But again, to Bitcoin, Bitcoin was designed to be a digital asset. Yes, you can use it for payments, but the real utility is actually for it to be a digital asset. In other words, it's a store of value. It's a place where you can put currency in and be able to maintain the value of the currency you put into Bitcoin, you know, throughout a long period of time. Okay, so similar to gold, hence why Bitcoin is called digital gold. Now, for those of you who are more, you know, who have more understanding about this, you know that Bitcoin has a maximum supply of 21 million. It will never go over that. Okay, so that maximum definite supply limit allows for there to be a known limited supply. Now, there are other features of Bitcoin which are important before I move on to help you to understand why I'm discussing this topic today. Now, Bitcoin has cycles of every 4 years where we have Bitcoin halving, and which is the miners who work on the Bitcoin network receive half as much reward every 4 years, which seems mean, but it's a deflationary protocol in order to allow for Bitcoin to increase in value and for it to continuously grow to where it needs to be, you know, or to stand as a digital asset. Now, because of the volatility of Bitcoin over the last, or since its inception and it was listed on an exchange or any exchange for that matter, because of the massive volatility, it's been very difficult for, you know, traditional minds or CFI, you know, centralized finance to understand this so-called digital asset. Okay, it's very intriguing now that the institutions for the first time have actually got into Bitcoin. Now, I'm going to click on this whilst I'm talking, but when we think about Bitcoin as an asset, usually assets should have an appreciating price over time because they have a limited supply, so that demand should increase over time. Like for example, gold. Okay, now with gold, it's a bit of a difficult one because there is a limited supply, but then at the same time, if you wanted to be really cantankerous about it, we don't actually know the supply. We just have an estimate of it. But you see the big, you know, difference, the stark differences between, you know, Bitcoin and gold, all right, compared to, let's say, currency, the US dollar, is that the US dollar has no, there isn't even the theoretical limit of how much, you know, let's say currency can be printed out. Depends on how many trees are available. This is why I always tell my students in academy, the amount of trees that exist in the world probably is the theoretical limit of how much uh, dollars can be printed. Okay, so in other words, there isn't a supply cap or a total supply. Okay, so when we look at what we have with Bitcoin, it has some fantastic features which allow it to be an asset which has some predictable things that we can use, or predictable aspects to it that we can use in order to make predictions as to what's going on with the price. Okay, so we can see over the years we've had a very, 2014 the price was quite, low. Into 2015 we stayed around the 2000 to, you know 200 to 1000 mark. We had a massive peak here, 17, 18K. Then the drop again throughout the years, and now we've had a massive spike taking place. And this is just the beginning, guys. If you think this is a massive spike, you haven't seen anything here. Now, with Bitcoin, why are we talking about this today? If you don't understand what the height of the market is, so if we look over here, the last massive height or spike or boom, in other words, what we term the bull market, the top of the bull market here in 2018, if you bought in at the top, okay, it took many, many years before you recover. Not only that, you would have lost quite a bit of your investment. And this was the news that you were hearing during the period of time when Bitcoin started to crash out. Now, people thought that it was crashing and it's going to fail, but all that really happened was the natural, normal market psychology things that happen within the market, which I'll explain in more detail. All right, so let's move on now. The first thing we want to do to understand Bitcoin is to understand the predictability of it. Now, Bitcoin is predictable, and there's a fantastic, fantastic. Now, shout out to Trading Shop. This is a fantastic depiction of it, and this is called the Golden Bull Cycle Ratio. Now, you can actually search this out and find it on TradingView, or if you Google it, you can grab this. Now, when we come to, in order for us to understand how we're going to protect our gains, whether it's through Bitcoin or altcoins or both, we do need to be able to have a deep understanding of this chart, okay, and understand the intrinsic or the protocols sit in place with the Bitcoin system, okay. So with Bitcoin, every 4 years, okay, so every 4 years. Now let's put some annotation here. All right. So I'm going to use my pen to write this out for you guys. So every 4 years, put this over here. Now, excuse my writing, okay? I'm not using my touchscreen laptop today. So 4 years we have, I'm going to put this here, the Bitcoin halving. So the Bitcoin halving is when the block rewards that miners receive. Now, Bitcoin is a proof of work, or comes to consensus by proof of work. So the topology of that distributed ledger is in that form of proof of work, which means, okay, people mine Bitcoin. When Bitcoin was released, you could have gained Bitcoin for free by offering your computer up to the network to be a miner, okay, or what we'll term a node, to be able to contribute to the network and receive rewards in Bitcoin for your services, okay? So why are we looking at this now? Because of Bitcoin's protocols, every 4 years, as Satoshi Nakamoto designed, okay, we're going to have a Bitcoin halving. Now, when the Bitcoin halving happens, it's supposed to be a deflationary protocol, which it is, and that is supposed to cause the price of Bitcoin to increase over time, okay? Now, the last Bitcoin halving is in 2140, okay? So a very long time from now. And by that time, when we get to that period of time, there will be no more Bitcoins to be mined, okay? So in other words, within the Bitcoin system, okay, the miners are going to receive transaction fees only instead of mining rewards, as we call them. But for now, where we are, 100 or plus years backwards to where we are in 2021, if we look at the bottom here, so the bottom was the low in 2012, okay? And then we had the first halving take place in 2012 around November, okay? And then we see that the top of the market during that period was around this area right here. So just around about 2014, something along those lines, or 2013, somewhere there, from what we can see. Now, why is this important? So when it comes to the cycle or the bull market, now in every market, when we talk about market structure, in any way, the foundation of market structure is that there's going to be a cycle of bullish movements or upwards movements, and bearish cycles, which is downward movements. So it happens in every market, is normal. Okay, there is a time for buying and a time for selling. Okay, otherwise a market wouldn't be a market. If you think of it like a foods market, sometimes you got to buy things, and other times if you're selling, you got to sell. Otherwise, the people that are buying and the people that are selling won't have anywhere to be able to make a place of exchange. So what we have here is a very nicely charted out cycle of the last two Bitcoin halvings. Okay, so we can use this from history. So from 2008, 2012, so 2008 was the inception, so Genesis block. So I'm going to put Gen block here. That's the first block to be ever mined. It's 2008, 2009, that period there. So moving forward, so 2012, we have our first halving. This is the bottom of the market. So we're looking around about $2. And then the top of the market in the same kind of period of time, we get all the way up to $900. So we see that this first movement here, we have a swing of almost 45,000% gain, it looks like. Okay. So this is what you would consider a bull run. Okay. So this is the bull market where Bitcoin is gaining massive gains. Now, the same way that Bitcoin right now, when we look at all of the altcoins, Bitcoin still has the largest market cap, therefore it has dominance. Okay, so the term Bitcoin dominance comes from the fact that the majority of the crypto market at the moment, most of the market cap comes from this single coin, Bitcoin. Okay, now here's the top of the market. So if you notice here, after the halving is where we see the parabolic movement. So the first movement, we see a gain right here. So roughly around about $2 to about uh, if I put a line across here, we're looking roughly around about $7. All right, so it's still respectable. So from about $2 to $7, we're looking at about 400% gain. So I put 400% gain, roughly around about that. Okay, and then we can see from this $4 mark, this is where the X $7 mark, excuse me, this is where we get up to around about, according to this, if I drag the line across carefully, yeah, up to about $900. So we see from $7 to $900. Okay, if I just erase this out of the way for you, okay, we see that the major percentage gain is after the halving has happened. Okay, and this is how it would be forever because this is the pattern of Bitcoin is predictable. Okay, the infrastructure of the system causes Bitcoin to happen, or the price action of Bitcoin to be in that manner. So if I again want to draw again, okay, take off the eraser. Now I think I can even put text here as well. So I might put some text because my writing is not so great. All right, here we go. We've got some text. So if I put this on, we're looking from about $7 to $900. Now I like to do the maths. Okay, I'm not a mathematician, guys, but I just like to do the maths on things because it helps. So roughly, we're looking about a percentage gain from, if I put this here, so percentage gain with some quick maths. All right, so 900 divided by 7. Okay, we're looking at about, so if you do $900 divided by 7, so we have 128x. So we're looking at 128,000% gain. Okay, from looking at what we can see here, which is massive. Okay, so you can see that the major gains happen in the last 49%. Now, in terms of days, because the Bitcoin halving is roughly around 4 years, you can actually calculate the exact time period. So we can see the first part of the bull cycle was 371 days. Then we had the Bitcoin halving. Then we had 364 days after this. And then after that, we had the top of the market. And then we had the bottom. Now, this bottom wasn't so bad. The price pulled back to around about $100, which, I mean, I guess in contrast to people who bought somewhere near the top, this is actually quite drastic. And then we can see from around about, I'd say $150 price again, we have 27th of June 6, 2016. We have the second halving. And we can see in the second halving, we get to this period. Now, this period of 2017 into 2018 is a very historic period. This is where I came in. I heard of Bitcoin when I was in college, which in the UK would be um, before you go to university. So the midway between that, I'm not too sure what other countries call it. But for those of you from the UK, I was in college, sixth form, and during this period, I was, yeah, 2013 is when I heard of Bitcoin, when it was near its top, and I heard of a guy who bought a bunch of Bitcoin and forgot about it, but he was a coder from somewhere in Sweden, and he made almost $1 million dollars from it. And I saw and I thought, wow, but I kind of said wow and never looked at it again, really, which I regret. Okay, so now we've got to the second halving in June 2016. The second halving we can see here, same kind of pattern. We have about $150. The price gets up to quite a good amount. I'm going to use my mouse here. So we go from about $146 all the way up to about $800 here again. So very close to the top of about $9 to $1,000, somewhere around here. So we can see we have a gain from this low right here. So let's call it 150 for talking's sake. And then we get to the halving period, which is about a 700% gains, just a bit less than that. Okay, so from 150 to 800, roughly around here. Now, these are all rough figures, okay? These are all approximations. This is why I'm speaking in this way. I'm not doing exact percentages, but just to give you a picture of the contrast that we have. So in the bull market, so if I put this roughly about 500%, 450 to 500%. I'm not doing any division in a calculator. I'm just trying to put this out here. So this is where we are. Okay, then moving forward, pull my mouse back up. So from the time of the halving, we have a slight drop in the price, so $441. And you see this is where we get up to with this 19,000, almost $20,000 price point for Bitcoin. So you can see that the halving, the price action of the in this bullish market or in the bullish market is not by accident. Okay, the Bitcoin halving, by doing this and increasingly causing Bitcoin to be deflationary, allows for the price to skyrocket as the demand increases, okay, and the supply decreases, because this is what the halving really does, okay. And so you can see here from this price point 400, what I had about $441 up to about 21, so almost 20, let's call it 20,000. Okay, we have a massive percentage gain if we did that. All right, if I put that here, so I'm going to put some text here for you to see that. So in terms of percentage, again, starting from that top point of 20K all the way down to about 440, all right, we have about 50x gain, which means looking at about 5,000% roughly, I believe. I hope I have the maths right. Let's just double check that to make sure. So 2,000, 20,000 divided by 441 times 100. So my calculator is saying about 4,500%. Okay. I guess, you know what, for the sake of the text here, let's delete this. We don't need this text right now. Get rid of that. So I think what I'll do, just to make sure that we have the right numbers, I'll do the quick calculation. All right, so from this bottom part here, 150, so about 450. So the percentage gain is a lot less. We're looking at about 300% plus, all right, at the low estimate. So you can see there's a stark contrast between the gains on the left to the right. So after the halving happens is where we see the parabolic movements, as we call them, okay? So, and you can see that with this bull market, it lasts for 49% of the period of this bull market, and the 51% is where we have the initial bottom to the growth period until we get to the halving. Now, you can see here we had another bottom. Now, the bottom we had in this market, we had a market crash to go along with this. So this market crash, we had the price of Bitcoin around about 4,000, three and a half to $4,000 a coin. Okay, and at the moment we're approaching the point where we're getting to the halving. Now, the halving has already happened. Okay, we had the halving happen 11th of May 2020. I actually watched it and broadcasted it live. Okay, now I think the misconception during the halving is that the price was just going to skyrocket straight afterwards, but it doesn't actually happen in that way. But the halving has happened now. Okay, so what we're looking at in terms of time, if we want to calculate in terms of 51% to Now the ratio, okay, is that we have a 51% period where the price starts to go from a bottom to a certain price point, and then in after the halving happens, we're in the days for, in this case, 504 days, okay, until we have the next cycle to the top of the market, and we could see Bitcoin rally all the way to 225,000 a coin, or even more than that, okay. Now to calculate this, all right, we can actually have a date to work out. Now, why we're doing this, we want to work out roughly when is the end of the next bull run. Now, why do you want to know this? Because when the end of the bull run happens, we have another special event that happens. Okay, now I'll be talking about it in an upcoming video, but we have what we call the Bitcoin bull cycle, and then we have the altcoins which follow for roughly, looking at history, about 1 month after, before they top out and then the price starts to reverse. Now, why is this so important? Because you want to know when is the best time to get out and to secure those gains. There's no point of being involved in crypto, watching YouTube videos all day, watching me or watching any of the other great producers of content out there, reading books and etc. But then you don't know how to get it, or not even how to get in, but how to get out of the market at the right time. Okay, you don't want all of your hard work to go to waste, or you don't want all your hard-earned gains to go to waste, and you definitely don't want to lose the money that you've put in, especially if you're sitting on profit. All right. So from the percentage calculation here, we had 518 days from the bottom of the market until the halving. Now we had a situation in 2020. Of course, the price dropped quite a bit because of the coronavirus, but the bottom here in 2019, okay, not to mix them up, the bottom for the market crash was down around about here, okay, and then this is about December. So 2020 bottom is a bit further here, just to use the mouse so that you can see. All right, right here. All right. So as Bitcoin has taken off, okay, we can see that we've approached the halving now. So if we do a calculation from the 11th of May, okay, 11th of May, okay, and you can even do this on the internet, 11th of May 2020, okay, plus 504 days. I believe Google can actually calculate this, okay. So if you do that, you can use Wikidates to do this. By estimation, it says here that 504 days from May the 11th is actually Monday, September 27th, 2021. So in other words, by estimation, the end or the tops, as we can see here, the top of this next market, bull market, okay, that we'll have coming up, which hasn't really taken off just yet, okay, but the top of the Bitcoin bull market, or the highest point, is going to be roughly on a Monday, September 27th, okay. Now I could draw a trend line here to kind of ascertain to where the price could go, and if I did so, I don't know if I can actually do this. Can I get a line? If I was to draw a line here for you to see, if the price was to rally according to my drawings, so I ignore my drawings, but if the price was to rally roughly around about 50, at the moment about 56K, so if the price was to rally going forward, then we could see Bitcoin even get to about 200 to, now make sure that this line is proper. So I'm going to select this and grab this line, make sure it's right. So we could see Bitcoin even get to, now if you look at the price action from this perspective, if you're somebody that's not involved in Bitcoin or in cryptocurrency at all, then if you've heard people say that, oh, Bitcoin is going to get to 400,000, you can see why it's not far-fetched, because opposed to many other or most other altcoins, Bitcoin has a very predictable model in terms of the infrastructure of how the Bitcoin um, system works. Okay. Now I know it's not a system in that sense, but in terms of the monetary system, or if you want to put it that way, or Satoshi Nakamoto's monetary policy, which I think is absolutely genius, you can see why this currency is going to increase, because we're going to have we've had another drop in the supply of Bitcoin, but then we've had an increased demand, which should push the price even possibly up to about, I would say, 300,000, 400,000. Okay, which wouldn't be abnormal. Okay, but once the price comes back down, it's going to kind of level off from where it started off. So you can see that once the price broke the first top, it never came back. So once if the price was to come back in the bear market or in the bear cycle, most likely the price will only come back to where it left off the last time, so about maybe down around here. But we'll see. Okay, so this is why it's important for us to understand this. So this is my prediction. I'm looking around about September for this to happen. Okay, now it could happen a little bit earlier, a little bit later. Okay, there are some factors that affect this. Okay, but this is just important for you to see for yourself. Now, what you want to do, okay, when you observe this, is to use this tool to help you as a guide to be able to work out when to get in and out of your positions. So guys, I hope you enjoyed that video. Don't forget to smash the like button and also follow me if you're not. So hit the subscribe button and hit the bell notification so that you can get all of the newest content up to date and on time. Take care.